All right, welcome back to The High Rise, a laid-back, data-backed conversation about all things cannabis, where we cover cannabis MSOs, Canadian LPs, products, and market analysis. I'm here with Emily Paxhia.
Hi, everyone. Happy to be back in The High Rise this week.
And I'm also here with Matt Karnes.
Happy to be here. Laid back, data back, and we go way back.
That's right. We do indeed go way back. We do indeed. I don't know how many years, at least 5-6 years.
2014, I think. I mean, that's when so it's been a while.
Well,
a lot of data.
I knew of Cy, but he was like a celebrity to me. He was, OG. But yeah, Matt, you and I feel like we're in this like from the same kind of starting line, 2014.
We're in the freshman class.
We are.
Yeah.
Yeah, it's amazing how time flies, and I know the old joke. It's like dog years in cannabis, right? Every 1 year feels like 7, and it seems to be even accelerating at the pace of news. But I don't know. Maybe we'll start with the elephant in the room. Clubhouse. So we started The High Rise on Clubhouse, and I'm not sure if you guys saw the news from, I believe Business Insider broke this news, but Clubhouse downloads for the month of April were 900,000, which is, a big number. But in February, it was 9.6 million. So,
wow.
Yeah. I'm not saying there's a correlation, but, we're over here now doing a podcast, and we're not on Clubhouse. Numbers plummeting. I don't know. I don't want to take the blame for the loss of their audience, but the High Rise community, yes, not there anymore.
It's difficult too, because you have a lot of people talking about the same thing in different rooms, and I don't know. I kind of found it a little bit annoying because in the middle of the night I get these bing, and so and so's talking about a bong or whatever, and it's like I really want to sleep now. So and I know it's probably my fault because there probably are settings that I could work, but I didn't, and I just assumed do it this way.
It'll be interesting to see how it plays out. I think the debate right now is Clubhouse a product and a service, or is it more of a feature? Twitter has their spaces and others have it. And I think there's a good use for it. And, these things, this is the way it goes. But apparently the retention numbers are good. So the people that are in there are sticking around. And I'm sure, we may be back at a certain point as well. I love the live nature of it. But the challenge for us was just the conversation goes away, and we wanted to have a way to archive it. But we'll see how it goes. Still no Android users, still plenty of room to grow. But I just thought that was an interesting headline, non-cannabis related, but just given that's where The High Rise started, I thought it would be interesting to call out. But speaking of cannabis news, let's start up in Canada. There's a few things that kind of came up this week that I think are pretty interesting and worth covering. The first, and I actually wrote about this today, Sundial and Spirit Leaf, or Inner Spirit Holdings. So Sundial made an acquisition of Spirit Leaf. The interesting thing here is that Sundial is a brand. It produces a set of brands in the markets, vapor pens and flower brands, and I think some oil brands. And, they raised a sizable amount of capital. I think they were on the brink for a moment there for a while. But with this big capital raise that we kind of discussed around the Wall Street bets traders coming in, and buying the largest retailer by door count in Canada is an interesting model. And it's something that is pretty unique to cannabis. When you think about CPG, and the big CPG companies in traditional verticals like Coca-Cola or Frito-Lay, they're not buying retail chains and building out retail chains. They may have a direct-to-consumer play, but it's very different in cannabis. And when you think about retailers and retailers getting into CPG, that seems to be a bit more common. Retailers with their private label products, whether that's, Costco and Kirkland brand or, all the Trader Joe's brands, but you don't see Kirkland sold in other locations. And so, kind of seeing that move, I think is pretty interesting, but I also think it's just a byproduct and a dynamic of the cannabis industry. We talked about Curaleaf on a previous High Rise and some of their CPG ambitions. And I believe it was Matt McGinley that said that that's the nature of just the way these licenses are rolling out in certain limited markets. But in Canada, there's a bit more flexibility. So we think it's just trying to get to scale, trying to get to size. I noticed that Sundial is not producing edibles or beverages yet. Do you think it would have been a better investment to, invest in their brand portfolio? Or do you think having a retail footprint is the way to go? Is that going to be the model we'll see?
I think everything is evolving and firms are going out and seeing what sticks and seeing what, consumers like best and how cost effective it is to roll out these products. But at the end of the day, like if you think about it, if you think about like, Jim Beam, whiskey or Patron vodka, they don't have like specific retail stores for that, right? It's sold in wholesale. And, eventually I think that's kind of how everything will work out. But right now everything is restricted to how the laws are in each state.
Yeah, I mean, I do think that they're just trying to make some aggressive moves with the cash to establish a footprint, and then maybe they can fill in the products from there. Because I actually think that Curaleaf had established, their flags across a wide reach in the United States, and then they bought Select and kind of started backfilling on brands from there, and now they're very brand focused, clearly. But they also have done a really good job of planting flags in all of the key markets that they would want to be in. Maybe not all, but many. So I think like I mentioned last week, Sundial seemed to struggle operationally in their business, at least initially. So maybe they're just thinking if they've got the cash, go buy someone who's actually achieved some scale and start there. Maybe they're just like, now we can start at a higher point and run. So I think that might
Right.
be a way to think about it.
Yeah, last week with Sundial, we were talking about they're investing in a JV, like an investment arm to drive, some investments and grow. And so this is, more use of that cash that they're sitting on, which I believe is a fair amount. Yeah, and in California, you see it. The parent company kind of took that model with Caliva. They've got retail, they've got their brands as well. I just wonder, long term, if all the retailers are producing their own brands and distributing those brands to competitive retailers, and they're competing on retail as well, does it start to look more like traditional CPG, or is it totally different? It's just a unique category, And so it's interesting to see, but it does seem like a pretty good bet. I mean, if I was Sundial now with this kind of access at retail, you could have, Sundial products featured, and it can really drive more sales, build that relationship with customers that you couldn't without having that retail footprint. But, Canopy Growth has their Tweed stores. And, I know that Spirit Leaf sells Tweed products. So it's kind of like, Canopy's going to be competing on the retail with Sundial, competing on the retail, but they both want their products in more stores. So maybe because of that, they just end up continuing to work together. Or maybe it becomes untenable. But it's interesting to kind of see that trend happening more and more, and especially this week with that news. Further news in Canada, a high tide in CBD. This is another thing we've talked about in the past. This how do I get to America from Canada? And CBD seems to be the avenue, whether it's Canopy Growth and Quattro, their Quattro brand in Southern Glazers, which is also pretty recent news. But high tide coming in with another CBD brand purchase. So are we just going to continue to see this? It's going to be like a broken record pretty soon. We'll be talking about this week over week.
I would say yes. And I just think everybody's jockeying for their leadership position and seeing, how best they can work the market. And there are some risks to doing this because still, at the end of the day, we don't really know how CBD is going to be regulated. So there could be all this effort in a product or products that may not be sustainable when the federal government comes in. I'm not saying that's going to be the case, but that's a risk.
Yeah, I mean, I think it's just to your point, Sai, it's a way to reach into the US. It's a way to expand your footprint, maybe gain more customer data, see how products sell, different form factors. So yeah. So I think we'll continue to see more and more of this, but I'm curious, how many more CBD companies you could buy that are going to drive value. So, because it's been a tough market because of exactly what Matt said. Like the FDA's lack of true guidance has made it really difficult to operate. So anyway, I think it'll be interesting.
Yeah, yeah, certainly something to watch going forward. And it just if we see federal legalization here, I'd imagine the pace of acquisitions coming from Canada with some of the capital they're sitting on would be pretty extreme, given that they're purchasing brands in the CBD category. Also in Canada news, I don't know if you guys caught this. The OrganiGram CEO has left the building. Pretty recently.
Permanently.
Yeah, permanently. It sounds like. He came from Tilray. He was at Tilray prior to OrganiGram, and he made some news maybe 6 weeks ago about the BAT investment. So BAT doubled down or made that investment with OrganiGram, talking about creating an innovation facility, really talking about bringing some of their innovation on the beyond nicotine programs that they're looking at, vapor formats, things like that. So I thought it was a pretty big win for OrganiGram, kind of given their position in the market to attract someone like BAT to bring them in. Seemed like a good thing. I don't have the context of the departure, but he did come from Tilray to OrganiGram. Do you think we're going to see him pop up at another LP soon? Do you think it has anything to do with the BAT investment?
Well, didn't OrganiGram really woof on their last earnings call? I kind of applaud the fact that, it's like one strike and you're out. Maybe it was two strikes, I don't know. But, it's just goes, it's a testament to how the industry is evolving and it's becoming more professional, and these type of things don't they don't fly. There was, how many quarters did Bruce Linton screw up before he was asked to leave? I mean, it was quite a lot. So this is, we're in the major leagues now, man. This is like, we're not JV anymore, so you got to play accordingly.
Yeah. Yeah, I don't know. I mean, these guys seem to wash up on the shores of other companies
Oh yeah.
after they depart. So I wouldn't be surprised if he shows up, maybe maybe he shows up on a SPAC, or he shows up on the board of a company, or
Back,
and then
back,
he'll have
back,
like
back.
some, yeah, yeah, he'll have some kind of like crazy comp package, kind of like you mentioned with Bruce Linton. We've seen him wash up on the shores of many companies, and so um, I don't know. I don't feel like that there's a true merit-based reward system in our industry yet, where excellence is getting people into positions where they get to create more value and derive value from the companies that they're getting involved in. I feel like it's just this person's been in cannabis, so maybe they should come over here and they won't be as bad as they were at the other
Yeah, they,
company. I
they
don't know.
won't burn the whole house down this time, maybe just half the
Yeah,
house or whatever.
yeah,
Because like look at Adam Bierman. He just like basically he's resurrected. He's somewhere. I never would have thought. Like in any other industry, that would have never happened. So he's back on, I don't really know in what capacity, but the fact that I've read that, he's back, I don't know. At least hopefully people know this time around, what they're dealing with.
yeah.
So.
Yeah, all good points. Well, speaking of Tilray, the Tilray-Aphria merger is a done deal. I know that took a little while longer. I think they had to lower the threshold for the vote count, and I think we touched on this in a previous high rise, where it's just hard to get the retail investors to come to the table to sign. But it sounds like it's happening. Some of the headlines around that, there was a number of RSUs I think that were given to some senior people, but I guess they're now the largest cannabis company by revenue. Does that still hold?
Yeah, I believe so. And I think it's really exciting because, they have a play into Israel, they have a play into Europe. We're just starting to see what's going to happen with them. We're still so early on. But when you think about these strategic alliances and when the rest of the world is just starting to come on board, there's huge opportunity. You just got to make sure that you don't burn the house down on the way, or sink the ship or hit the, iceberg or whatever, however you want to call it, along the way. But I think, people, the investor base and the level of sophistication is in check now for the most part. So,
Yeah.
I my My favorite tweet this week was this someone was like, "Are they going to call it tilapia now?"
I saw
I just
that.
thought that was pretty funny. I love the Twitter verse around cannabis because there are some really funny people in there. But yeah, I mean, we were early investors in Afria. I still think they have some great assets, and I do keep in touch with Carl, the COO over there. I think he's a down to earth guy. You know, some people really dig him on the um, sweet shoot. What's
Sweetwater.
the Sweetwater transaction? I don't necessarily. I mean, I do. You know, I poke fun at it sometimes because I'm like, well, it's beer, but I get where they're going from, and like to me, hops aren't that far different from cannabis because it's all kind of that same thing with terpenes and everything. So I don't think it's that much of a departure, and I think if it wasn't for the regulatory framework, we wouldn't have to have them so separated. But it is what it is. So yeah, I mean, I'm glad that they got it over I guess I'd call it now the starting line. So they got it over the starting line in this
Right.
new business, and I'm curious to see how they're going to continue to try to, now that they've put it together, they've got to really drive their synergies and make it worthwhile. So I'm curious to see how they do in executing on that.
Yeah, and they didn't rebrand it to Tilapia, unfortunately, but they did launch a new logo, which is basically the Afria logo brand mark with the Tilray word mark, right? And just kind of
Yep.
color changes. And so
Yeah.
that's interesting. But what I'm really waiting to see is kind of what does the brand portfolio look like? Do they sunset some
Yeah.
brands? Do they double down on other ones? Where they start to invest, buy more beer companies?
Yeah. I was a little sad to see the Afria ticker go away because it was one of the first tickers in our portfolio. So it was a little bit of like a bye bye. An era has ended in
Just goes to
cannabis.
show how old we are.
Yeah, old Dusty here. Well, and that was like the transaction with Jazz Pharmaceuticals and GW occurred this week. So Morgan and I were kind of like early guys in the portfolio. You're moving on and up, like
That's right.
going forward. So
I had
yeah.
such a nice run in GW, and I saw, well, could have sure. If I had tomorrow's paper today, I wouldn't be here right now. But
Good to
you
know,
know,
Matt. Too big for us at that point.
well, no, I'd still be here. Just I would be on a yacht somewhere doing this. Um,
I love it.
Yeah.
Well, as we kind of wrap up some Canada news, Kronos. So earnings season's coming up. A lot of stuff's coming down the pipe here, and Kronos announced some a bit rough, I would say, on the earnings front. What was it? It was down, I think, 20% sequentially on a quarter-over-quarter basis. I was looking at the numbers. I think versus a year ago, they were up 50%. I think they it was 12 million versus 8 for the quarter. And I took a look at the market and looked at our data here at Headset to see, what was the quarterly growth for Canada in general, Q1 2020 versus Q1 2021, and it was about 90% growth for the market. So the market almost doubled. So they're certainly trailing market growth. I think they called out some headwinds with the pandemic, and Canada unfortunately has been really suffering with the lockdowns. Markets like Ontario, where 45% of the population live, have really had it a bit tough, and as those lockdowns happen, I think access has been limited. But just kind of a bummer on the earnings. I know they announced some things like moving into the edibles market. I think they said something like they're not the first, but they want to come in, as the best. So we'll see. The brand, this is a flower brand of theirs, and I believe they make vapor pens as well. Spinach is their brand. So the edible brand is going to be also called Spinach. Certainly not resonating with the youth audience, so we don't have to worry about that. Kids going after cannabis when it's called Spinach. But we'll see how that impacts their sales, right? How that impacts their sales longer term. But yeah, any commentary on that? Is that what we're going to see with the other earnings coming forward? Is it something unique to Kronos? What do we have to expect there?
Well, I mean, what was just amazing is I think that they missed on every single line of business in terms of hitting their targets, and so I mean, It's just dismal. Yeah, it is. It really is. And especially because they've got the, I just see like the companies that have gotten the biggest investments from outside of the industry are just, as Matt said, whiffing it. And it's like all I can think about is if the capital had been directed into companies that are really executing, then this industry would look even better. But it is what it is. It's like the tech industry, there's wave one and wave two, and maybe this is a pets.com situation, but or maybe not. Maybe they pull it out with spinach and just really go to town. Maybe. I think it's like, yeah. Sorry, go ahead, Matt. Well, I mean, it kind of feels like it's Altria's SPAC in a way. Like, I'm just wondering if they're waiting to just use the money to just buy something, to save the day, and maybe that they're just waiting for legalization so they can keep their listing and just do something or a change in our federal situation. But that's what it feels like to me.
For sure, they're going down the tobacco path. But the thing with Karnes, so this is a good example of a company that's way back when we talk about going way back, because they were one of the first that out of the gate that went public. We didn't have a lot of the folks that we have now. And there was just limited amount. Nobody kind of knew what was going on, and they had some semi-credible people, and things just started taking a turn. And then you had the oversupply and more, builds and so forth. I think, well, first of all, in terms of net income and the woof on the earnings, I think that's pathetic, because if you compare Canada to the U.S., we have such a high cost of prohibition here, not just 280E, but just as I've talked about a lot of times, just everything, compliance, whatever it is, the list can go on and on. They don't really have that. I mean, maybe it costs a little bit more money to grow, and their costs are operating costs, maybe, but so in parts of the U.S. too, we have that. So I don't know. When you stack it against the U.S., that's just kind of pathetic. But the silver lining could be, so as they enter into, the edibles and so forth, as the price of flower comes down, that raw material, is less, so their margins should expand if, in fact, there is widespread acceptance of their products. So that could help them, but I don't know. I'm just sticking to the U.S., man. I'm just
Yeah.
that's where my money is.
Never, what did Warren say? Never bet against America.
Right, exactly. And that's what bothers me so much, because we should be freaking crushing it. We should be the supplier of the world, and and everybody has a head start. Constellation is a U.S. company, but they put their money in Canada. That money should have been put in the U.S. I don't mean to sound like a Jerry Seinfeld here, but it's kind of.
You're not wrong. You're not wrong, and hopefully that will be the case sooner than later. Fingers crossed. So speaking of U.S., let's move out of Canada, come back across the border, back into the U.S. here. So last week we talked about Ascend going public, listing on the Canadian exchanges, but an American company. How is all that looking? How'd it go, Emily? I know you're an early investor in Ascend, and that was some big news. Also, I believe they opened a Boston store, or it's opening, which is huge news. So I'm sure it's all smiles over there. But how are things looking?
Well, I mean, it is, but it is. I mean, so to your exact point about kind of the accessibility and the easiness of being a U.S. cannabis company in a public market. So the way the process works is we had to get onto the CSE first, and then we're trying to get the OTC done, which Gage is also going through, because that would increase exposure and access to the stock. But instead, we're just sitting in very low liquidity on the CSE. So the stock has kind of went, and actually, I mean, I have to be honest, as an investor, I'm much happier if the stock just builds. I want the chart to build. I don't want it to be like this whipsaw action where it opens at 20 and draws down to 7, and then we bounce up to 12. But so we've been kind of bouncing around $9 Canadian, 9 to 9.75 Canadian all week. But I think, like Morgan said, that every single share there was nothing to trade today, because every share is spoken for. So we've got to get more float. We've got to get more access to more investors. And I know I know I'm so excited for the Twitter guys, all the big MSO gang people to get access to it because I know they want it and they want access to these
Mhm.
other companies. So it's just tough. It's different being a public U.S. Cannabis company. The actual mechanics of it don't function like a normal public company. But yeah, I would say I'm very happy with how it ended up. I'm very happy. We have a stock chart that's building. I'm excited about the Boston location. I'm excited about how they went about the listing process, doing a full U.S. prospectus filing, which is an arduous process. It took them months and months and months and a lot of hard work. And we did the gap financials, audited financials. We did everything so that, Abner is a very savvy guy. He ran a really successful hedge fund. He came from Bauhaus, which is also an incredibly well recognized group. So he knows, he understands what you want to do to set it up to attract good investors. And so that's really what I would say Ascend has really focused on in this process. And I think they achieved it. I think we're just, dealing with the challenges of being a public cannabis company in the US. So, but I think it's good. I'm excited. Yeah. Mm,
I'm
yeah.
really excited. But you know
Hmm.
what I also think is cool is that the new regime or the new group of companies that have emerged in this year and toward the end of last year, like they know what they don't know, right? So they're gonna
Right.
get the best growers, or they're gonna find out what they're smart enough to know that. Whereas if you look the other way, it's like, ooh, what? Oh, ooh, IR? Ooh, I didn't know how to manage street expectations. I didn't know any of that. So it was a really big cluster, blankety blank, out of the gate, because nobody knew how to manage these things, the street. And then you had analysts stepping in, and some were better than others, and some didn't really think through sort of the message that was coming across. So I don't know. It's interesting.
Yeah.
Everything is.
I mean, I do think like we've got the Friend Street location that's opening. Well, it opened, but we're doing the grand opening next week. It's going to be incredible. It's right by the Boston Garden. It's huge. It's beautiful.
Oh,
They did a lot of community development there. Our CEO of Ascend Mass, Andrea Cabral, she's an incredible human being. She was the sheriff of Suffolk County at one
oh
point,
wow.
she's a trailblazer. She's unbelievable. And that's cool too that we had the first CEO of any entity within Ascend was of a state because all these things have different entities because of cannabis and but it's cool that it was a female. So I thought that was really she's an absolute powerhouse. So I'm excited for that store. I can't wait to go check it out. And I think they're going to do some really cool, to your point, Sai, about products. They're going to have like different brand experiences because they have such a impressive footprint. So different floors will have different experience. It's a multi-floor store too. It's going to be,
Wow.
I can't wait to see it because this is the first thing I saw when we were investing in Ascend. And I was like, that's an ambitious task. We got other markets open first before we got this thing open. But, the first floor I think will be for more of the products that tend to get purchased very frequently. So I'm sure they'll be using their headset data to help to drive how they're productizing the store. But then they'll have brand experiences and brand pop-up shops, and so it's going to be a really cool consumer product experience within in the four walls of that operation.
I want to get in my car now and go up there.
Yeah, it's pretty
I
neat.
could do the same. It would just take me a few days from the West
Just a
Coast
few
here,
days, yeah. Um,
but it's tempting. So speaking
yeah.
of public markets, some news this week: Credit Suisse pulled the plug on executing cannabis trades and
My
the
God.
custodial function as well. And I'm not sure their reach as far as the custodial function versus just trades. Like if they're providing that for a lot of kind of retail traders out there, but. Did we see an impact? Are we going to expect to see an impact? Are we going to expect to see others? Like just like what you're saying, Emily. I mean, being on the CSE and not a lot of floats, not a lot of liquidity there. You want to get it on the OTC, get more traders buying and selling, and now you have Credit Suisse pulling the plug. What the hell? Like, why did this happen? And what do we need to expect here?
Well, one observation is I don't know if you guys remember, but in October 2019, Bank of New York, Mellon did the same thing. They
Hmm.
said no, no more, right? So
Yeah.
I looked at the but the game was different then, right? You didn't have an ascendant on, in play. You had GTI and some of these other winners, but it was early on, right? So there wasn't as much excitement around these names. I mean, GTI back then was like, I think $7. But when I looked at
$7 exactly.
yeah,
Hmm.
yeah. And so when I looked at like, how did the stocks react to that news? It was like a little blip. Like now it's much more profound. Um, and I think who else was it? Oh gosh, the name escapes me. It'll come back to me as soon as we hang up. But I think there was another firm that could put the kibosh on the execution. It sucks. My only guess is like, well, first of all, okay, why now? Like, why are you doing this
Yeah.
now? So there's probably like there's something going on, some person, some head of something. There's a personal thing involved. There's got to be. There always is. When things take a turn, all of a sudden, and it kind of reminds me now, well, a couple things. I think we're going to talk about the SEC, and the SEC now has some guidance around warrants for SPACs. Okay, like why? Like, so they want to record. Well, they want to record the warrants. Have companies, SPACs, record warrants as a liability versus equity. Okay, why? Why? SPACs have been going on for how many years? So my take on that is it's a way. There's been, the SEC is coming down on SPACs unfairly, and I think this is a passive aggressive way to put the brakes on because it's a pain in the ass what they're going to require. So, it remains to be seen, but that's my take on that. And it's similar to what Jeff's Attorney Barr did with the industry as a whole. He knew he couldn't shut the industry down. So what did he do? He instituted these antitrust reviews of many of the MSOs to distract them, to consume money, to consume time. That went really nowhere, but the ploy was, oh, well, gee, maybe if I screw them up, the industry will shut down or slow down. That's my perception. So everything's driven by, a decision from somebody for whatever personal reason. Anyway.
Yeah. I mean, I think this may have had a bigger impact in April than people realize because from what I understand, they did have some institutions on the platform that had pretty significant dollars at work in the industry, and they were forced to sell out before April 30th. So, you started to see the stocks lift a little bit in the beginning of the month, and it was like April 20th should have been, I mean, cannabis was flying out the doors and the market was just absolutely inverting. So I can't help but think like there are rumors that like Wasatch, they were a big investor relative to our industry. Like that's an institution. That's a very well known institution. And from what I understand, it's some groups like that that had to completely get it out of there because of Credit
Wow.
Suisse. So I think it's because Credit Suisse blew themselves up on that other thing too. So this could have been like a bigger Credit Suisse issue. And they were like, it only takes one risk guy. And I say guy because a lot of the time it's a guy, but that'll like shut the whole thing down. Like that's how we lost our very first bank account we got defrauded. Someone wrote checks. I have to mail in checks to the state governments and do filings, and someone ripped off our checks. It was the most ridiculous job I've ever seen too, because I saw the photocopies of the fake checks, and that got us. We got raised to a risk, even though they knew what we were doing. Some new risk person looked at us and decided, you're out. And that's the first bank account we lost of many, even as a fund. So anyway, that was enormously disappointing to me, this whole thing. Because I just feel like to Matt's exact point, like how are we going backwards right now? How are we going backwards right now?
Yep.
Yeah,
But
and you wonder,
we've been here before.
whoever's sitting around making these decisions, I mean, are they not reading the newspaper? Do they not know that there's going to be changes at the federal level, that more states are legalizing? Like, where do they think the risk is now?
They're obviously not listening to this podcast.
They're not. And you know what?
Clear.
I am going, next time I'm in the city, I am going to one of these banks, and somebody listens. So anyway.
Well, you mentioned GTI. GTI made a couple of headlines. Again, every week, so many headlines. But, this one is money related, new senior debt financing. which, you can't go to the capital markets or the public markets. Maybe there's some debt financing available. But what I think was interesting, it was about a little over $200 million. But I think the interest is surprisingly low for, cannabis operator at about 7%, which is a great sign. Obviously, they've built a sizable business and a real, great business, and I'm sure that helps with that number. But is this, the new kind of benchmark? Is it less risky for banks? Are we going to start seeing lower rates kind of going forward from debt facilities?
I think it's going to depend on the quality of the company. And if you recall from last week, I did the analysis where I showed the cash flow relative to the tax liability or the current provision. And the companies that are in that circle have the cash, right? And I think that's the bullseye of, I think those are going to benefit from a refinancing at a lower rate. And it's not surprising to me that GTI was able to get a lower rate. Their cash flow is way in excess of, their tax liability, which is, we talk about, 70, 80%. And they're still, dealing with the headwinds of the added costs of prohibition. So it's remarkable. It really is remarkable. And when prohibition ends, it's even that much more attractive. So I don't know, if I was a lender, I'd be like, hell yeah, this industry is on fire. There's so much more growth, and the numbers speak for themselves. And they have real auditing firms too. I mean, one of my criticisms of sort of, when I go through all these things, guys, I used to be an auditor, and like Louis Dewey and Screwy audit firm, they don't really have like some of the footnotes, some of the things don't like add up, right? If you're an accountant, you got to make sure 1 and 1 equals 2. Okay, I mean that's a pretty
You'd hope so.
basic. And going through this, I'm like, why doesn't this equal whatever? So that's why I have less hair now, I think. But anyway, so it's not surprising, and I think there's going to be the elite class of the MSOs that will probably be able to refinance at that rate. Not everybody, obviously. It'd be interesting when credit agencies come in and rate the debt. We haven't seen that yet in cannabis. And the only thing that sucks, but it's pretty beat, but you can't deduct the interest expense under 280E. So even though it's 7%, it's not like it's, usually it's, the rate less 1 minus T when you do your cost of capital, but whatever, it's still better than 15% or whatever it is. I think acreage actually did 18% or something, not.
And it was like a
Wow.
3-month note. Yeah. Yeah, it was really scary. Yeah, no, I mean, Ben Kovler has been, as long as we've been investors in GTI, he's always been focused on how do we reduce the cost of capital in our business? How do we improve that aspect of our operations? And so one of the things they've tried to do too is hold on to assets so that they can get leverage in different ways. And so it's a lot of the MSOs do sale leasebacks, and they do too, but they like to hold on to as much real estate as they can to use that to help to securitize any further lending that they can do. And so I think that helps you to get a lower rate too. But one of the things I think that was super smart that they did, and it shows me where they're thinking, is, well, so they did it and there were some warrants attached to it, just to point that out. So there was a little juice to it for people who participated, and which was smart because their stock is a good stock and it's worth doing that. But the thing I thought was super smart is that it has a 1-year timeline and no prepayment penalty after that. So my feeling on this is that these guys are thinking it's going to get even better than 7%. We're just going to keep going down if we keep doing what we're doing. And the people with the lowest cost of capital, their capital goes further, their shareholder value is just improved. And I just think it's critical to growing these businesses truly efficiently and effectively. So,
Yeah, well, they're going to need the capital because the next bit of news out of the U.S. is Virginia's heating up, and GTI made some bets there. I believe they announced acquisition of Dharma, one of the limited licenses that exists. Virginia is pretty unique, I would say. Recently, I believe it was back in March, they passed some sort of compromise to legalize recreational cannabis, one of the first in the South. But they set a launch date of 2024, which is That's a weird.
Prohibition could totally be over by then. I don't know.
Yes, maybe that's what they're hoping for.
Yeah.
But more recently, their House Speaker said that she will support a measure to legalize adult use marijuana July 1st instead of waiting nearly 3 years. And this was echoed amongst others in the government. So it sounds like things might be moving faster than 2024. And, seeing some of the activity, whether that's GTI jumping into that market, Jushi also betting big. When I kind of looked at the operators in the market, it's very much Pennsylvania. It's like the same crew from Pennsylvania rolling deep into the south there. So, what do we think? I know MJ Biz has some projections, probably based on population. They said first full year, probably $500 million in sales, and by its fifth year, $1.4 billion, which sounds reasonable. Just another example, another limited license market, looks and smells like Pennsylvania. Let's go here and let's jump in and hope that it starts adult use before 2024.
You know what's interesting? One of my observations around this is where we are now. So things are percolating pretty quickly, and back in the day, everybody went, gun for the New York license. The smarter people, I think, sort of stayed on the sidelines, knowing it was going to be a long time before, rec would be passed. And they're bleeding cash. I think they, bled a lot of money in especially in Manhattan. Columbia Care, there's really no market, it's expensive and so forth. But now what we're seeing, it's like, okay, medical, boom, quickly we have the rec market. So you don't have that gap. So your return on investment is, obviously going to be a lot more favorable now. And the companies that are stepping in and getting medical and then converting to, or, gunning for the rec versus, some of these earlier states. So it sort of underscores, sort of the competency or the prowess or whatever you want to call it of some of the newer guys. That's just my 2 cents on that.
I just think it's an exciting market. It's adjacent to other interesting markets. We looked at assets in Virginia for some of our other companies. And I think just to share one point of view is that as an investor, we are looking at opportunities where we are playing into these kind of single state baskets so that we are thinking about acquisition strategies as they go. So if there's a market that we really like, we're looking for companies just like what GTI just acquired and what Jushi acquired. So it's just an interesting time to be an investor into those markets as they're opening and kind of trying to decide what your timeline is till something like that happens.
Yeah, well, it'll be interesting to see how Virginia pans out, and hopefully something before 2024. Well, I think that'll do it for this week. Anything you guys want to share upcoming?
Yeah, I'll just jump in. So Poseidon just launched its third fund in the beginning of March. We already had our first close, and we're going to be deploying capital into our first 2 companies. So really good things happening there. We're very excited. So we are still raising the money. It's going to be a $50 million fund. And it's post-seed stage, which we're excited to be kind of moving back to the earlier stages of companies again. So I'm happy to talk more about that in the future, especially after we've invested some of the capital on it. But it's pretty exciting strategy.
Yeah, May 17th, we're hosting a webinar, a SPAC webinar, Can a SPAC Outperform? And we're going to have 3, maybe 4 sponsors. Right now we have Jamie Mandela from Air and from Glass House, and we have Choice Consolidation, and then we have Ruth Epstein with BGP Partners. So we're excited, and I think it's going to be very informative because we're going to be analyzing a lot of things I think that nobody's really talked about, and then hopefully I'll have my research paper ahead of the call or around the time of the call, so there'll be some more information for folks. We're going to be launching at some point. I'm having difficulties with a website right now, but a specific SPAC research for cannabis, and exciting.
Very cool. Well, thank you both for joining, and this is turning into my favorite day of the week, so looking forward to doing this again next week, and we'll see you then.
All right.
Thank you.
Cheers. Thank you.